Welcome to the Auto Accident Attorneys podcast brought to you by the Auto Accident Attorneys Group, where our motto is simple. We take care of you. While we're known for helping people navigate the aftermath of auto accidents, this podcast is about so much more. You'll find helpful episodes on what to do after a crash, how to deal with insurance adjusters, and tips for preventing accidents in the first place. But we don't stop there. This show is about taking care of people in every way we can. That means talking about topics that impact your everyday life, whether that's how to set up a power of attorney, or even if a power of attorney is necessary for your family, all the way to making healthy lifestyle choices so that you can live in excess of 100 years old. Each episode is designed to offer thoughtful, often overlooked advice to help you stay informed, empowered, and cared for, whether you're dealing with an accident or simply trying to improve your life and your community. Because at the end of the day, taking care of you isn't just something we say, it is what we do. And I love promoting the office that way. Today's episode is really about taking care of you. You guys have seen how much I've talked about the importance of insurance, whether that is health insurance, life insurance, disability insurance, auto insurance. You have the power to protect yourself. We oftentimes believe that we live in this really safe, secure system. We're in this bubble, and the powers that be have systems set up to protect us because an injustice has occurred. And so there must be something that makes sure that things are fair, things are equitable, that if we suffer a harm, there's some sort of government or state agency, or maybe a benevolent private company that's going to take care of me because I've been wronged through no fault of my own. Well, I'm here to remind you all that that is utter bullshit. None of those things exist. No one is here to save you. You must save yourself. To the extent possible, spend the money and purchase the appropriate products from reputable companies to protect yourself and your family. That's the most you could do. This isn't going to be some prepper episode and telling you to buy guns and protect the homestead, but you can protect yourself and your family. Today we'll talk about specifically auto insurance policies and auto insurance coverage. I would like to actually invite, if you're listening or if you're a listener that happens to know an auto insurance broker, somebody who sells auto insurance policies, I would love to have them on as a guest. I also want to have an insurance adjuster come on, but I don't think they would. I'll be very friendly and fair. I really do want to get their perspective. But if you're an auto insurance broker specifically, if you happen to sell other types of insurance, we can get you on as a guest as well. But I really would love this episode to lead into a part 2 with a guest that is in this space and they're actually selling insurance. You know, a lot of times people think that because I proselytize about auto insurance so much that I might actually be like an insurance agent. I don't sell insurance at all. That's why you should listen to my advice, because my advice is coming from the person that looks at the policies that are in place after tragedy has occurred. It doesn't even necessarily need to be a tragedy. It could just be a severe inconvenience. But I'm looking at it after the fact. And most people don't think about the stuff beforehand when they're making choices. If I had to guess, if you're listening, you probably chose your auto insurance based on the best rates available. And maybe because somebody told you that you have full coverage. If you're not watching me on YouTube, I just used air quotes. Remind me from Joey from Friends when he used air quotes incorrectly, but I'm using it correctly because the word full coverage, or the words full coverage, are a bit of a misnomer. It's commonly used by people that don't have a real understanding of how auto insurance coverage works. It's not an actual type of insurance policy or a specific type of coverage. It's also not a guarantee that every possible risk is covered. It's actually just a marketing term that generally refers to a policy that may include a combination of liability and collision coverage. But even then, it doesn't tell you what the limits of the coverage are. Let's put it this way. You and I both have full coverage, but your full coverage could be worth $1 million and my full coverage is worth $25,000. Full coverage in and of itself doesn't tell you what you really need to know. We've had clients call in uh, right after an auto accident and there's no insurance information on their police report. So I'll have that conversation with the client to let them know that there might be some issues with insurance. It's a catastrophic accident. They're like, oh, I've got full coverage. Don't worry about it. Full coverage doesn't tell you how much of the damage it's going to cover. You could have full coverage. Maybe that includes the uninsured motorist protection part. But do you have 25,000, 30, 50, 75, 100,000, $500,000 worth of coverage? You could have full coverage with uninsured motorist protection and only $25,000 worth of coverage. You're right, you have full coverage, but it was only 25,000. So again, the point of making this distinction, and I'm going to keep hammering it home, is the fact that if somebody tells you that they've got full coverage insurance, or if you are sitting at home and you're like, I've got full coverage insurance, you actually have, if that's the extent of your knowledge of your policy, you actually have no clue what kind of insurance you have. If you know that you have full coverage and you know your limits, you're ahead of at least 3/4 of the population that are insured drivers. Because again, most people just have no idea how they're driving around. They're out here raw dogging these roads, you know? So let me go through 4 different types of property damage coverage that are available. Full coverage, when I said that it covers liability and collision coverage, this is just for purposes of property damage. This is only your vehicle. And also, quick side note, if you're only dealing with damages to your vehicle, you're likely never going to need an attorney. Very rarely will you need an attorney if there's some sort of bad faith failure to insure issue going on, or if you've got like a supercar that the parts have to come from Europe, for example, and it's not going to be available for another year. You're gone without your car, then you can make a claim for something called loss of use. A lot of that stuff going down in Newport Beach. So if you've got a supercar in Newport Beach and you've got issues, call the Auto Accident Attorneys Group. We're here. Let's go over the 4 types of property damage coverage real quick. There's 4 types: liability coverage, collision coverage, comprehensive coverage, and then uninsured property damage coverage. I don't know why I counted this way. Let's go this way. 1, 2, 3, 4. Liability, collision, comprehensive, uninsured. And when I say uninsured, I'm only talking about uninsured motorist property damage. What do all of these 4 different types of coverage mean? Liability coverage is the most basic, simple coverage you can have. If I asked you right now, a lot of you probably know what liability is. Liability coverage kicks in when you are liable for the accident. It covers injuries and property damage you cause to others. It protects your assets by paying the damages of others when you're at fault in an auto accident. This is the minimum requirement of insurance in most states in order to get valid vehicle registration. In other words, if you buy a car and you want to go register your vehicle and get the tag registered and get the little sticker that says that you're a valid driver for the next 12 months, you have to present a minimum amount of insurance. The minimum amount of insurance is going to be, the type of insurance is going to be liability, because the state wants to know that at a minimum, if you cause injuries to somebody else, they want to know that you have enough safety net, enough insurance to pay for that person's damage. Now, you remember we were talking about not just the type of coverage, but the amount. So that you don't have to necessarily have collision or comprehensive coverage, but you have to have liability for others. And then you have to have the minimum amount required by the state. So in the state of Georgia, for example, the minimum amount of insurance in order to be a valid driver is, if you've been listening to this show or seen any of my social media, you should already know it. Say it with me. $25,000. That is the minimum amount of insurance. Uh, if you're driving in the vehicle in your car right now, listen to this. Think about your car. Is your car worth less or more than $25,000? How does it make you feel knowing that the minimum amount of insurance required in the state of Georgia is 25,000? That all the other drivers, in order to become valid drivers, they have to prove that they can cover at least $25,000 worth of damage. And that doesn't make me feel very good. That's why I always carry uninsured, underinsured motorist protection, which we'll get to. But anyways, in the state of Georgia, it's 25,000. In California, it used to be 15,000, believe it or not. It just recently moved up to 30. Maine, the state of Maine, has a $50,000 limit, minimum amount limit for insurance. So when we're starting off, you want to be a valid driver in a state. You have to meet that state's minimum amount of insurance coverage, and you use it through liability coverage. So you have to have liability coverage and the minimum amount. In the state of Georgia, that's what I'm going to use as an example today because I'm in Georgia recording this. To be a valid driver, you have to have liability coverage for $25,000. And then you get your sticker for your license plate and you can drive. Now, that's number one. Number two, collision coverage. Collision coverage pays for property damage to your own vehicle resulting from a collision with another car or object. Here's a key component of this. Regardless of fault. Remember that when we get to the uninsured property damage coverage. Collision coverage will pay for your property damage when that resulted from a collision regardless of fault. Collision coverage protects your vehicle after an accident, whether you caused the accident or someone else caused the accident. You get into an accident, you rear end somebody else. You've got full coverage. So you've got your liability and you've got your collision coverage. You rear-ended that person. Your liability coverage is going to pay for their damages for whatever amount, well, based on what their damages are, but your assets will be protected for the amount of insurance that you've gotten in place. So let's just use the state minimum of 25,000. So you rear-end somebody else, your liability coverage will pay up to $25,000 for damages you caused to that person. Your car is also damaged, but you have full coverage. You've got collision coverage in addition to liability coverage. Collision coverage will pay for your damages, but again, you got limits of $25,000. So you can only repair or replace your vehicle up to that $25,000 if you're working with the state minimum full coverage policy of $25,000. Here's where it gets a little bit not confusing, but this is why when I tell people it doesn't mean anything when you say that you've got full coverage, because here's another type of property damage coverage. Oh, by the way, in that last example, it only applies to your property damage. If you don't have medical payments coverage and you cause an accident, you're not going to get your injuries paid for. You don't have coverage for your own bodily injuries without med pay coverage. If we flip that, let's say that you get hit by the other person and they're uninsured and you have that state minimum. You've got liability coverage and collision coverage. You don't need to use liability because you're not liable for the accident. You weren't at fault. The other person was at fault. You're going to use your collision coverage because they don't have insurance to get your property damage repaired, but you don't have uninsured motorist coverage for bodily injury and you were hurt in the accident, you're SOL. You're not going to be able to get those damages paid for. If you've got health insurance, you can visit doctors through your health insurance, but you're going to have to pay the deductible yourself. There's nothing to go after. If you're following along, we've already covered liability and collision. We're talking about property damage only. The third type of property damage coverage is comprehensive coverage. Comprehensive coverage covers damage to your vehicle caused by non-collision events. So collision coverage is when it's a collision with another car or object. So you get into an accident. Everyone knows that. You run into a retaining wall. You run into a deer. That's collision coverage. Comprehensive coverage is vandalism. We watched the LA riots, right? If somebody spray paints a cab on the side of your car, uh, theft, weather related incidents, the floods in the Carolinas, like all these cars are underwater. If they don't have comprehensive coverage, collision coverage won't protect them. They needed to have comprehensive coverage for that. So again, somebody could be walking around saying, I have full coverage insurance, and their car gets flooded, and they call their insurance company and they're like, hey, my car is stuck. It got flooded. I need to get this taken care of. The insurance company is going to look at their policy and say, hey, you don't have comprehensive coverage. That's not a covered loss. Insurance companies' favorite words, not a covered loss. Why is that their favorite words? Because they have taken in premium dollars. They've taken those dollars and they've invested them in the capital markets and they're making a return on their investment. And when you come to use the insurance and make a claim, they don't have to pay any of the money that they've earned to cover your loss, even though you've purchased the product. Why? They're not bad people. They're not an evil entity. I love insurance companies. I have to use a ton of insurance for all areas of my life. You didn't use insurance correctly. So it's not their fault. It's your fault, especially after today. Now you're going to be armed with the knowledge to know how to appropriately choose insurance policies and what to purchase to protect yourself, your property, and your family. Man, I feel like a commercial. Somebody should sponsor me. That's right. We're sponsored by the Auto Accident Attorneys Groups. All 7 of them. That was plural. So comprehensive coverage covers non-collision property damage such as theft, vandalism, weather-related incidents, falling objects, and animal collisions. I'm sorry, I said animal collisions with the deer for collision coverage. I think it technically would be covered under collision coverage, but also in comprehensive coverage. Now, remember when I said I wanted to have an insurance broker on here or an adjuster? That's who I want to ask. Or we could look at people's policies. If you want to email me and send me a copy of your policy, I can go through your individual comprehensive coverage if you've got it, or your collision coverage and see which ones cover what. As a matter of fact, that is the best thing you can do. You need to read your policy because sometimes State Farm may cover something under comprehensive, whereas Allstate won't, or vice versa. So always read the policies and the riders that come along with your policy. I got a line here that says comprehensive coverage provides protection against a wide range of risks beyond just accidents. Hence the term comprehensive. Well, yeah, I took notes in preparation for today's episode, and I really liked that. That was a little realization I had come to, and I was like, oh, that's why it's called comprehensive, because it protects it. It gives you comprehensive protection. So you want collision and comprehensive. Some full coverage policies, I'm using air quotes again, uh, in addition to the liability, they'll have collision and comprehensive. You'll see it even in the same line item. It'll say collision comprehensive. Others will not. Others will just have collision, but it won't have comprehensive. Any questions? Raise your hand, leave a comment. The last type of property damage coverage we're going to cover today is the uninsured property damage coverage. We went over collision coverage, which pays for the damages to your vehicle regardless of fault. There's an additional type of policy that you can have, which is the uninsured property damage coverage. This acts just like collision coverage, where it pays for your damages to your vehicle. However, you can only use this if you are not at fault for the accident. You cannot have been liable. You could not have caused the accident. If you caused the accident and you have collision coverage, you can use your insurance to cover your property damage. If you caused the accident, you cannot use uninsured property damage coverage to pay for damages to your vehicle. You can only use it in those circumstances where you are not at fault and the other driver is uninsured. Uninsured/underinsured property damage coverage offers coverage if you're in an accident with a driver who either doesn't have any insurance or enough insurance to cover the damage they cause to your vehicle. In comparison to collision coverage, this type of coverage only applies when someone else is at fault, but they don't have adequate insurance coverage to pay for your damages. This adds an extra layer of protection so you're not left to cover the property damage costs if the other party is inadequately insured. How do you feel? That was a mouthful even for me. I wish I'd brought a glass of water in with me. We've just gone over property damage coverage. We're not touching bodily injury yet, but there are additional types of coverage. I used air quotes. I think maybe I used that one incorrect that time, but there are additional types of coverage that you would want to add to your full coverage policy. Again, today's episode is all about addressing the fallacy of full coverage. When people are going around saying that they've got full coverage, I've got full coverage, say it with your chest. They're pounding, they're peacocking. I got full coverage, but they don't know how much coverage do you have and what kinds of policies. We're addressing the fallacies of full coverage. We just went over the property damage stuff. There are 3 additional types of coverage that you can and you may want to have. One of them is you're not going to have a choice. If you purchase a new vehicle, you already know the moment you drive that off the lot, it's going to have less. The market value of that vehicle when you drive it off the lot is below your rate at what you purchased it. If you financed it, if you've paid it cash out, that's, you're good to go. That's gap coverage we're going to cover. Another policy is medical payments coverage. This is when I was talking about the bodily injury stuff you could use regardless of fault. And then you have your roadside assistance and rental reimbursement, which that's somewhere where, you sort of make a choice. If something happens to your car, do you have a service through the dealership that you bought it from? Are you handy? Can you change a tire easily? Or are you going to need assistance if something goes awry? If something goes awry on the road. Well, let's just jump into it and we'll discuss. The first type of additional coverage that should be part of a full coverage policy is MedPay. MedPay is short for medical payments coverage. Medical payments coverage covers your own medical expenses and, in some cases, those of your passengers, regardless of fault. If you have MedPay, you can take a look at your declarations page and see on the line where it says MedPay, it should have a number. It might be 1,000, might be 5,000, might be 50,000. I've seen it as high as $100,000 on MedPay. I think that people get it that high simply because it's so cheap in comparison to insurance. MedPay coverage as an additional rider is it's a nominal cost to add on to your auto insurance. If you've got health insurance, MedPay probably isn't that big of a deal. But the way I would look at MedPay is as if having health insurance through my auto policy. If you've got health insurance, you may want to have a lower amount. Let's say that your health insurance deductible is $5,000. It might not be a bad idea for you to have a $5,000 MedPay policy in your auto insurance, because that means that, God forbid, if you're involved in an auto accident and you're picked up and taken by an ambulance from the scene of the accident to the hospital, and you've got an ambulance hospital stay, ambulance is going to cost you anywhere from $1,200 to $1,800 nowadays. I'm recording this in 2025. I don't know what it's going to be like next year, but I'd say just under $2,000 is what an ambulance ride is going to cost you. A couple hours in the hospital, let's call it like $5,000. So we're rounding up 2 for the ambulance, 5,000 for the hospital. You're at $7,000. You have health insurance, but you've got a $5,000 deductible. So your health insurance will kick in after you pay that first $5,000. Then they'll kick in and pay $2,000, and they may not even pay for the ambulance. They'll pay for the hospital, but they may not pay for the ambulance. now this gets into like, what does your health insurance cover? But assuming that they do pay for ambulance after your deductible is paid, that means that you were involved in an accident, which is not your fault. You had nothing to do with it. You were victimized and the other person doesn't have insurance. So you're out 5 grand plus you have to use your health insurance. Well, if you've got MedPay at a $5,000 limit, there's your deductible. So yes, you still have to use products that you paid for because of somebody else's negligence, because of somebody else's fault. However, you're no worse off or worser off than you would have been otherwise. Now, obviously, you've been injured. You have to go. You've got property damage to deal with. But what I mean is you've already been victimized in that sense. It's not worser because you have the protection through MedPay to at least pay for your deductible. And then once your deductible is met, health insurance should cover everything else, right? The cool thing about MedPay, it's super cool, dudes. The really neat thing about medical payments coverage is that it'll have one number, in our example that we're using of 5,000, but that $5,000 is available for each person in your vehicle. So you were involved in that accident and somebody rear-ended you and you were not at fault, and it's you and your best friend and your best friend's two best friends in the backseat. There's 4 people in the car. Each person in the vehicle has access to $5,000 of that MedPay coverage. MedPay will cover medical expenses, actual incurred medical expenses, by the way. MedPay will cover incurred medical expenses regardless of fault. So take that same example and say you rear-ended somebody. It's your fault. Everyone in the car has to go to the hospital by ambulance. Everyone in the car has access to, each person has access to $5,000 to cover those medical expenses. And again, it's pretty cheap. I'd love to have an auto insurance broker on the show so we can kind of like look at some of these different policies and what it costs. So you guys believe me when I tell you it's a nominal additional fee to add something like MedPay coverage to your auto insurance policy. The other type of additional coverage is roadside assistance and rental reimbursement. This is pretty self-explanatory. I hope you guys already know. Roadside assistance helps cover the cost of towing, fuel delivery, or other emergency services if your vehicle breaks down. Rental reimbursement pays for a rental car if your vehicle is being repaired due to a covered claim. Now, again, these 2 additional types of coverage are, I think this is where you sort of look at your life circumstance and decide whether this is necessary or not. Or you can also add something like a AAA, not the Auto Accident Attorneys Group, but the AAA roadside service. They're really cheap. I want to say it's like $100 a year, maybe $200 a year for like a family of 5. But they'll do roadside assistance. If you got a dead battery, they'll come out and jump your battery, help replace tires, all that good stuff. So that's one place where I think you make a judgment call. The other type of additional coverage is GAP coverage. GAP stands for Guaranteed Asset Protection. This is what I was talking about when I said that if you purchase a new vehicle and you have to finance it, and the moment you drive it off the lot, that vehicle, if it's involved in an accident, a total loss accident, the market value of that vehicle is going to be less than what you're on the hook for on the bank. And as we know, whether it's a mortgage on a house or a car that's being financed, you don't have the title, the bank does. So technically, that's the bank's asset. So the bank will always make you pay for GAP coverage. Even if they don't make you pay, you're going to want to get GAP coverage. You can think of it, it covers the excess financial obligation owed to a lender where the market value is below what is owed to the bank in a total loss accident. So it means get guaranteed asset protection, but this is one of those neat little acronyms that says GAP because it covers the gap between the market value and what is owed. If you don't have GAP coverage and you have financed the vehicle, let's just call it let's call it 31,000. You purchase for $31,000, you put $1,000 down, you owe 30, and you make a right out of the dealership and you're hit head on. Well, let's not even worry about the injuries, just the vehicle itself, just the property damage alone. It's a total loss. The market value on that vehicle, the moment you drove off the lot, dropped down to $20,000. You don't have gap coverage. You've already put one in, you owed 30, you're going to get 20. That means that on day one of purchasing this new car, you have lost the car and you're indebted to the bank for $10,000. Get gap coverage. Get guaranteed asset protection. It's good for you. Even if the bank, a lot of times the bank will actually forget. Depends on, there's good and bad employees in every sector. And there are people that might be doing the underwriting for your financing and they might forget to get you gap coverage. You should still get it. A couple key points to understand about full coverage is that it's not a one size fits all guarantee. Full coverage isn't a standardized term defined by law or a specific insurance product. The coverages included can vary by insurer and even by policy. So it's essential to review the details of your policy to know exactly what protection you have. Even with full coverage, there are limits to how much the insurance will pay out. We already talked about the state minimum limits in every state. And just because the state says that this is the minimum amount doesn't necessarily mean that that's what you should carry. If you've got no assets, you got no job, there's no money in the bank, you got no equity in your home, you don't own anything, you know what? There's no reason for you to go out and pay any additional amount for insurance besides what is required by the state, whatever that state minimum is. But if you're an anesthesiologist, you own 3 homes, you own 5 rental properties, you got a house on 30A, you got 12 cars, 6 of them are supercars. Do not, for the love of everything holy, my brother in Christ, do not get state minimum insurance because you're only going to protect your assets for up to $25,000. If you have millions of dollars in assets, my friend, or as Persians say, my friend, I have a good deal for you, buddy. My friend, you need to insure your assets. You must get, the state's not going to require you to do this. I'm telling you this as your friend, as your confidant. This is dadvice today. You want to cover your assets. In other words, you want to get as much insurance as you have assets. If you have in excess of $1 million of assets, liquid assets, cash, equity in homes, property, you want to get as much as you have in assets in insurance. I'm going to make the math easy on myself. I have $900,000 worth of liquid assets. I'm going to get $1 million worth of insurance. You should probably get more because you can add on umbrella coverage, and that's not something we're getting into today, for very, very cheap. But if you have $900,000 worth of assets, you want to get $1 million worth of coverage. You don't want to be walking around with $900,000 in assets and a $100,000 insurance policy, because that means that, yeah, you've got $100,000, and if you don't cause damages more than $100,000, cool, all good. But if you do, if something catastrophic happens, you only have protection. You yourself, as the person, the wrongdoer, you have protection of $100,000. In excess of $100,000, you've got $800,000 in our example that we're using with $900,000 in assets. You've got $800,000 in personal exposure. You don't want to be in that situation. There's some nefarious characters that run healthcare facilities that will show assets of practically nothing. They do a lot of offshore accounting. They'll set up as nonprofits. Anyways, that's also another episode. But if you happen to be an attorney, even though this podcast isn't geared towards you and you're listening, especially if you're in MedMal, you probably know exactly what I'm talking about, guys. So in summary, I'm going to review liability only protects you financially if you cause damage or injury to others, but leaves you responsible for your own vehicle's repair or replacement. That's liability. Collision and comprehensive. Together, these protect your own vehicle from a broad range of damages. Collision for accidents and comprehensive for other risks like theft or water damage. So, when someone says they have full coverage, they typically mean their policy goes beyond the state mandated liability minimums and includes both collision and comprehensive coverage in addition to that liability, offering a more robust safety net. However, it's always a good idea to check the specific policy details so you know exactly what is and is not covered under your full coverage plan. I would like to invite any of my listeners to come onto the podcast and we'll review your policy line item by line item. If you don't want to disclose the dollar amounts, we don't have to disclose your limits. You and I can have that conversation off camera. But on camera, let's go through an actual policy and we can hold it up to the camera and show, where comprehensive is and go through your particular comprehensive coverage and then maybe have somebody else and look at their comprehensive coverage and see what their comprehensive insurance policy covers. Today's episode was only about property damage. We didn't get, aside from the medical payments, a little discussion we had on medical payments coverage, we didn't talk about bodily injury claims. This is all just for property damage only. I hope that you've gotten something. If you haven't gotten anything out of it, I urge you to go back and listen to this podcast again and take some notes. If you don't have notes, email me and I will email you a breakdown of the different types of policies, and you can go and sit down with your broker and analyze your personal assets and see what kind of coverage you need to best protect yourself and your family and your loved ones. And actually, your fellow citizens on the street. If you're an uninsured motorist and you're driving around and you're listening to this, do me a favor, go get insurance. If you can't afford insurance, stop driving. It's selfish. I know that people are in a tough bind, but it's not right. You can get into a bad situation yourself and you could cause a really bad problem for someone else. There's just an entirely too high of a rate of uninsured drivers on our streets, and we need to put an end to that. Not through punishment necessarily, because again, I understand if you don't have insurance, it's likely because you can't afford it. And I'm just having like a stream of consciousness here. If you guys have any ideas on how to combat that, let me know. Maybe there's some sort of fundraising we can do. We probably can't solve everyone's problems, but if we can solve that problem for a handful of people, I'd love to do that. Guys, thank you again so much for tuning in. I hope you've gotten something out of this that is so helpful that it makes you share this episode with others. Leave me a comment, drop me a like, share this episode. I appreciate all of you. Mom, I love you, and thank you for listening. Everybody, I'll see you next time. Take care.